welcome to another short educational video from New Century Planning. My name is Bob Ryerson. I'm the founder of New Century Planning. And today we're going to talk about reverse mortgages. And I'm pleased to have Donna Kutchta and Jennifer Fletcher from Amboy Bank here in New Jersey, who are our resident experts on the subject and have plenty of experience. Jen, you're 15 years in with Amboy, and Donna, I thought it was a typo, but 46 years with Amboy. So you were about 7 when you started working for them. Anyway, we want to talk about a subject that I think has some misconceptions. There's some negative connotations associated with it. And to be honest with you, I had those myself before I learned about them. So one of the things I think we can do today is explain to people how valuable, what a great tool this is for people. Tell me, why do you think there was this negative connotation? What is a reverse mortgage? Certainly we need to define that, how it works. But before we get there, real quick, why was there some negative, why does everybody think they're going to lose their house or they're going to give up control? Where do you think that comes from?
I think that came from the media. I believe that people really didn't understand the product and they felt that the bank takes your home, but that's not the case. The only time a bank would take a home for a reverse mortgage if there was non-payment of property taxes, then we step in and pay the property taxes. And if it goes beyond the value of the home and so forth, then we may ask for deed in lieu. It's a rare occasion.
But that happens in any event.
Right. Absolutely.
Regular mortgage or reverse mortgage.
Absolutely.
Can one of you explain, or both of you explain briefly, what a reverse mortgage is? Who is it available for? I understand there's some age requirements and other items.
That is correct. So let's start with the president of our bank, Gregory Scharf. He developed his own proprietary blend of products, which enables Amboy Bank to do both FHA and non-FHA properties. So this opened up a big arena for Amboy Bank to go into these retirement communities and help those in the 55 and over communities.
Why did it open up? What's the key with the retirement communities?
So the key is that a lot of these people, say if they lived up north and they had a home, they sold that and they paid cash for their home in the retirement community.
Down here.
They cannot go to another bank and get a home equity or a cash out refinance mortgage because they're classified as non-FHA.
Oh, okay.
So we're the only bank around that really can help them with the reverse mortgage product.
And what does a reverse mortgage do for people? Is there different versions of it? What are some of the mechanics?
Yes, with the reverse mortgage, one of the things that we really do see a lot of clients do, to Donna's point, is that if they're moving into a 55 and older community and a lot of times they want to remain in that home for the remainder of their life, they want to be able to age in place, and to be able to utilize the equity in their home to do that is so important to our seniors.
And you know, from my chair as a financial planner, I sit with a lot of people with a lot of money, but let's be honest, the bulk of the public, for whatever reason, wasn't able to accumulate maybe all that they wanted to on a liquid basis. But they're sitting on 300, 400, 700,000, they're sitting on lots of equity in their house. Maybe there's a little mortgage, maybe there's not. But what I want to have you guys confirm for me, and we want to convey, is that there's no reason to live uncomfortably if you can tap this huge nest. That's your nest egg. You didn't get what you wanted liquid-wise. Don't be short and cut yourself short and crimp your lifestyle, whether it's aging in place. I think you mentioned previously when we talked that people, if there's a long-term care situation, obviously the trend is everybody wants to stay in their house as long as possible and be comfortable. This enables that. If you can speak to that for a moment. I think you have a good story on that front.
Sure. With a reverse mortgage, of course, both borrowers must be age 62 or older and own and occupy their home as their primary residence.
Okay.
On a personal note, my mother-in-law got a reverse mortgage through Amboy Bank. She got the prime line of credit for in-home health care. Her husband had built this house. She wasn't going to be moving anywhere. It allowed her to stay in her house for 7 years, which was wonderful.
That's nice, yeah.
So she was really happy that she didn't have to impose and go live with one of her children.
Yeah.
And it gave her the flexibility to remain in her own home that her husband built. And she was very happy about that.
But it's also a situation that can come up a lot. But it's also if somebody's just not in that situation yet in terms of long-term care need, but they're a little short. They could use an extra $1,000 a month, or $500 a month, or $1,500 a month. So can we do a regular payment? Can we do a pool of money, a reservoir? There's a number of things before you're in a long-term care need just to make your retirement more comfortable.
Absolutely,
right?
Sure. So we
How is that determined?
So I'll give you an idea. So for a prime line of credit, you receive a line of credit and you can write checks as you need it.
Okay.
That's one way. Another way is you can take monthly ongoing payments for the rest of your life
There
as
you go.
long as you're living in the house. Another is you could take monthly payments over 10 years.
Okay.
So it allows you flexibility to either write a check as needed or
Okay.
have that stream of income.
Right.
Sometimes someone's shortfall might only be $500 a month.
Right.
This absolutely helps
And for the
them.
sake of living crimped and worried about money, no, you've got the equity in the house. Use it.
Right.
The kids will get what the kids will get. Let's talk about that, for example. So I think one of the misconceptions is that the kids are going to get nothing when, or the loved ones, the nieces, nephews, whoever is going to get nothing when the person passes on. What happens? You guys only lend to what? A max of 50%, I think it is.
So on the prime line of credit, we go up to 55%. So the borrowing table starts age 62 at 35%
Oh, it
and
does.
goes up as the person is older. At age 80, it hits 50% and then 55% thereafter.
Okay.
And then whatever's in use, if the home is sold, the proceeds of the sale pay off the mortgage,
Sure.
as it would, and then whatever
Whatever's
the
left.
remainders are, that's to the heirs.
Right. Same as if they didn't do a reverse
Exactly.
mortgage, right?
And right.
So it's a misconception to think that the bank's going to take the house. No, in fact, depending on inflation, there might be growth. I would give the example. Tell me if I'm correct. If the house is 500,000 and goes up 3% a year, that's 15,000. They could use 15,000 a year in the reverse mortgage and be no worse off in terms of their equity over time, right?
Yes.
Correct. And a good point too is if the senior passes on and one of their children, say, is the executor, executrix, they have a year to sell that home.
Okay.
But it's their responsibility to maintain the homeowner responsibilities, such as pay your property taxes, your homeowner's insurance,
Sure.
your HOA dues
Sure.
if there are,
Okay.
and the upkeep of the home.
Which is common sense. That's you got to do that in any situation.
Right.
Okay.
And say, for example, it's time to sell that house, and just say that real estate wasn't so good.
Mm.
And they've been in this house a very long time because, as you know, the interest compounds month to month. So say that it's time to sell the house, and they sell the house for $350,000, but they owe $360,000. Because there's mortgage insurance that they're being charged monthly, they can never owe more than the value of their home,
Ah.
which is
So
really
things get
key.
rough and they go underwater.
Yes.
We've had cycles where the house has fallen in value.
Yes.
So they're never going to be in a negative situation.
Correct.
That's good to know. Wow. Okay. And from a time frame logistics standpoint, mechanics, somebody decides to investigate. How long does it take to move along the process?
We're looking at about 5 to 8 weeks
That's
for
about right.
beginning to the process to the end.
Oh, that's not bad. 2 months. And one of I know you're the counselor. One
Yes.
of the requirements, I guess a federal requirement, is a counseling session so that everybody understands the mechanics and what's going on.
Absolutely. I meet with the seniors with every reverse mortgage through Amboy Bank. And specifically, I do a financial interview tool with them. I ask some background questions. We go over the key product that really best meets their needs, but then I also expand to let them know what other products we
Alternatives,
have
right. Good.
and are there alternatives. Once they select a product and we feel that that is the best product for them, then we move forward. So the counseling takes about an hour or so.
Okay.
We suggest that you bring someone, perhaps a family member, a CPA, your
Sure. Advisor. Yeah.
attorney, your
Sure.
advisor. We're very open to that.
Family
We
member,
meet at
sure.
a branch. If you're homebound, we'll go out to the house.
Oh, it's a nice service. Okay.
So if I
great.
go out to the house, of course, I bring my senior specialist, Holly Subhan, along, to the counseling session.
So it's a nice service, but most of the time it's in branch. Okay, the other question I had was the interest that they're being charged. Is it locked in? Can it be floating? How is that? How does that accrue?
Okay, so with our prime line of credit, it's basically we look at Wall Street Journal Prime and add 1.5%.
Okay.
Okay, that's the prime line that gives you the most money.
Okay, but is there also an opportunity to do something on a fixed basis for 10 or 15 years?
So there is. So we have Senior Choice and Senior Choice Plus. These two products are very unique. The Senior Choice allows them up to $50,000 with no closing costs. The bank absorbs them.
Okay.
So with that particular product, You can lock in 3 times during the lifetime of the loan. So it's really, really good because it's like discounted right now. Because as you know, prime's at 7.5. We add 1.5, you're at 9%. To lock in, our lock-in rate is only 6% right now.
Okay,
So you can lock in 3 times as long as you have in use 5,000 or greater.
excellent. You know, we have commercials on TV, famous people talking about, and I think it's good because I think the public needs to be aware this is a useful tool. I think a lot of people are going to need it. But you mentioned earlier your cost. The cost can be. I think one of the negatives on the home equity, on the reverse mortgages. Oh, they're so expensive. The fees are so expensive. But you guys have, maybe because it's a proprietary product,
Correct.
a lot cheaper fees. Maybe
Yes.
I think you said 60% lower than the one that's advertised on TV.
That is correct. So when we do a comparison, we run a quote for the client to show them the side-by-side comparison, and you can see what the costs are. The
And it's
federal
dramatic.
program is much more expensive than our product.
So pay, as usual, pays to shop around. I think even though the federal fees are higher, I think what I'm trying to convey is that this is a useful tool for people. Do not necessarily crimp your lifestyle in retirement. Enjoy yourself. You've got all of this nest egg doesn't happen to be liquid, but it's there.
Correct.
And let's use it. It's not. We're not going to disinherit anybody. The bank's not taking the property. You know, we have sensible limits. We're insured, right?
Correct. And also, a lot of people do want to hold on to their investments and be able to preserve that, and this is a way to tap into the equity in their home, even if they have to make modifications to be able to age in place, or they have a big purchase, they need a new roof, something in the home that they need to modify, they can tap into this and use it that way instead of tapping into their investments. So it's a financial tool as well.
Yeah, and let's talk about this because we haven't mentioned this yet. This is all tax-free, right? So even if somebody has I'm trying to think from a financial planning, from an income standpoint, somebody could use an extra $1,000. If they have a mortgage that's costing them $1,000, you guys would pay that off,
Correct.
right? And now we just found $1,000 a month net money. Or if we are taking a chunk of money, we're writing checks to ourselves, this is because it's equity in the house, it's all tax-free, right?
That's correct. It is tax-free income. These are loan disbursements, never
It's a loan.
classified as income. Correct. Some
So-
people even defer their Social Security. They'll do that. Do a reverse mortgage, defer their Social Security
And
so
let
that
that
they
build
get the
up.
higher
Wow.
amount later.
Wow, right, because
which
it
is
goes up
really
8%
key.
a year. That's okay.
Yes.
So there's a lot to explore. We'll finish up with the idea that let's not be negative. Let's be open-minded about this. This is a useful tool. We can reduce our expenses in retirement. We can increase our income. It's all tax-free. It's not terribly difficult to qualify, right?
Right.
And there's cheap versions around too.
Yes.
Guys have any closing comments?
It's a simple application, and,
Okay.
and each scenario is ran for that particular client's needs. And one thing that's great about Amboy Bank is that we do the process start to finish with you. And if anybody has any questions along the way, they're reaching out to somebody local that will
It's
be able to
personal. It's not
answer that.
some toll-free person
Absolutely.
across this
Correct.
in California somewhere or online. I think that's nice today that
I-
you can go to a branch and see real people
Speak
and
to a
talk to them,
person.
right? Yeah.
And as to what you said, Jennifer, we all work as a team.
Mm-hmm.
Jennifer and I were in the same building right in Old Bridge. We have our mortgage department right in the same building. So we're very hands-on.
Right.
And that's the difference with dealing with a local community bank.
Right. And plus the fact that the federal program is so much more expensive. I didn't realize that. So,
Right.
all right. Well, listen. Thank you guys for coming in today.
Thank you for
I
having
think
us.
we learned a lot, and I think
Thank
the
you.
message is good for everybody, right?
Thank you.
Thank
Pleasure.
you so much.
We're happy to help our seniors anytime, any way we can.
Excellent.
Thank you
Thank
for
you
the
so much.
opportunity.
All right. Great.
Thank you.